There's a trend of people playing prevent defense.
What do you mean by that?
Prevent defense meaning I'm going to wait 6 months. I'm going to wait till next fall. I'm going to wait till interest rates drop a little bit. And I think that macro trend that people are leaning on, personally, I think that is completely off base from the conversations that I'm having when people are talking about the level of vacancy, the fact that their rents are decreasing, and just simply the fact that many people are saying that they're going to wait is going to create a bottleneck where there's going to create a massive supply demand issue. My common sense tells me that everybody can't wait 6 months. Wait till next fall and succeed.
What's up, Denver? Chris Lopez here, the host of the Denver Real Estate Investing Podcast. And, on and off the last couple of years, I've been talking macro trends. We have been following closely what is going on with the multifamily market since we are seeing a correction, maybe a small crash. Anyway, we're seeing opportunity in the multifamily market here in Denver and actually really all over the Front Range in Colorado. Today's podcast has a specialist, Kevin Woolsey, who is a multifamily specialist at MMG. I guess your official title is Senior Advisor, Kevin. Over there, but I've known Kevin for years. He does a lot of wheel and deal in multifamily. He has his finger on the pulse. He knows what investors are looking for. He knows what deals are trading at. And he knows what, hyper local trends are going on. Kevin, I'm glad to find you on the podcast, man.
I appreciate you being here. Very excited to be here. The first, as you were talking, at first I was going to argue with you, as you said, that the macro trends, because the macro trends I'm not a particular expert in, or have, in fact, I feel very differently against the macro trends that are happening. But then at the end you said micro trends and, submarkets. But that's kind of the main thing that I wanted to talk about with you, is that the macro trends are not the same thing that's happening when I'm talking to somebody individually.
Yeah. And that's a great place to start. I said macro trends, interest rates went up, right? So, hey, interest rates doubled, all that affects things. Before we get into it, tell everyone about just what you focus on, specialize as a broker around town. What markets, what unit types, what type of deals do you do?
Yeah, definitely. Not to be too general, but exclusively multifamily, otherwise all across Colorado, Front Range, more of an emphasis on the surrounding Denver, Front Range area. Dip my toe into Colorado Springs occasionally, but not my specialty. But everything down to the duplex, the 4-unit, or the, several hundred unit institutional person. So I'm not a specialist as far as number of units or anything, but definitely a specialist as far as multifamily and the location.
Yeah, because all you do is multifamily, and you do everything from the little stuff, the duplexes and fourplexes, up to a couple hundred units, right?
Yeah.
All right. Go ahead.
No, it's not too important, but I was going to say, I love working with the smaller folks that are building their portfolio and have a fourplex, a duplex that they're kind of working on exchanging out. Those are my favorite people, because it's them building their future family wealth. It's the dream, you get to see them grow. So those are my favorite people, but obviously, do some institutional stuff as well. But yeah.
So let's jump into it. Let's talk about the opportunities in Denver and along the Front Range here. People know they follow the trends. Interest rates are up. A lot of supply is coming online. It's starting to soften. Rents have softened as well. But give us from your perspective, just what are you seeing as far as trends and where the opportunities are?
Yeah. Well, tricky question to answer, to be honest, because where I'm seeing the trends and where reading articles about the trends, to me, varies a lot, which is one of the reasons I was more excited to talk to you today. Because the trend that I'm seeing is been going on for years, and people that are in my similar position as a multifamily broker that focuses on the type of product that I do are going to say the same thing, is that there's a trend of people playing prevent defense, especially.
Prevent defense?
Yeah, prevent defense.
What do you mean by that?
Sports analogy or a metaphor. Prevent defense meaning I'm going to wait 6 months. I'm going to wait till next fall. I'm going to wait till interest rates drop a little bit. And I think that macro trend that people are leaning on, personally, maybe I'm wrong, but personally, I think that is completely off base from the conversations that I'm having when people are talking about the level of vacancy, the fact that their rents are decreasing, and just simply the fact that that many people are saying that they're going to wait is going to create a bottleneck where there's going to create a massive like supply demand issue when all the people that are waiting are all of a sudden going to hit the market. But it's tricky. It's trying to guess. It's trying to have a crystal ball. But my common sense tells me that everybody can't wait 6 months. Wait till next fall and succeed. Especially when, not to interrupt what you're about to say, but like especially with how many people I talk to, and we talked about some of the smaller deals, but even the bigger like institutional people that have like 30% vacancy. And I'm not like making numbers up. I don't want to say addresses or call anybody out specifically, but there's like large smart investors that have 30% vacancy, 40% vacancy. Even if their vacancy isn't that high, they're seeing like drastic NOI effects from lowering their rent. So aside from the person that owns a 12 unit and everything, like I think that there is, like a dam that's being built that is bottlenecked and pretty soon is going to like explode open.
In terms of like distressed or motivated sellers, because I mean that's one thing. Like I've been waiting for a bit, and I've started hearing some inklings, from brokers and other investors out there where they're starting to see some distressed properties. But like, hey, there's people like myself, right? We listed my fourplex together, how many takers, but I was an opportunistic seller. I get nothing for 1 year, 5 years, 10 years, and I'm cash flowing, I'm fine. But like, where does the distress property start? Because I've seen a couple deals out there. I'm like, I can't believe a property is selling for that much per unit in Denver. Like I never would have thought that 4 years ago. And now I'm seeing deals at 100, 110 a door around Denver, which was mind-boggling to me. So when you say the dam is building, are you talking about the opportunistic sellers like myself, or are you talking about the people who are at 30% vacancy with debt that's doubled, and the dam's going to break on them, or they're eventually just, expenses can only go so high, you can only run the red for so long?
No, it's a tricky question because like my general metaphor, my general analogy is that like to not play prevent defense, because that is going to, any sports guy, football person like knows that metaphor, that's not going to work out. But there are some situations where somebody that can ride it out for 4 or 5 years is going to be fine. Or, they got in at a tough spot in the market, no fault of their own, or maybe fault of their own, depending on the decision they made, but that just can't achieve that price point that they're aiming for. But I think that it's a complicated answer, but the majority of people that I talk to that are in a situation that has an event going to take place, whether it's something with their debt or something with their family, if they have an event that's going to take place and they think, oh, I'm going to wait till fall, or I'm going to wait 6 months, so I'm going to wait a year, I think are really putting themselves in a bad position. It's being very passive. It's playing the prevent defense, and that's a moment to be aggressive. And essentially it's catching a falling knife, and they think that everything's going to rebound. And to be honest, I do think the Colorado market's going to rebound. The Colorado market, the Denver market in general is like very strong. Job market, mountains, skiing, all sunny days, all the positive things. It is going to rebound, but the person that just thinks it's going to magically happen because interest rates drop a little bit, I think is a little bit silly.
Okay, so to understand here, you're talking about, hey, for people that have a looming event coming up, hey, their debt's going to, go past their interest rate lock here in 6 months or something like that. Like, start focusing now on, hey, start selling the property now. Don't wait for 6 months, because A, you'll probably put yourself in a bad position, and B, like the market. I think one thing I have learned over the years is real estate always moves slower than I expect. And every time the market changes, I'm like, oh yeah, took a lot longer than I anticipated. And yes, I think the market will rebound. But also the mantra 3 years ago was survive till 25. And that's not proven to be a good thing that rhymes. Yeah. So
sounds cute.
Yeah, but it's not reality. So you're saying for people who are going to be distressed here in the near future, is that kind of what I'm reading between the lines on?
Yeah, I mean, it's definitely not reading between the lines. I mean, my more active clients that I work with are looking at the fact that their property has, either the vacancies increased or even just 2-3 units have leased at a lower rate than they previously had been. And at the surface level, it doesn't seem like a big deal, right? Like, we only have 3-4 units that have dropped $100 in rent. Everything's going to be fine. That really doesn't affect everything. But the more aggressive people are looking at, and the more active people are looking at their competition, the people in the market right around them, and seeing that, connecting with people like me, quite frankly, or experts in the market or property managers, whoever it may be, to see that the property one block away, a couple blocks away, has a higher vacancy. They're dropping rents. They're doing a concession right now. And so you're just at the tip of the iceberg to that person, is what I would say. You're just at the tip of the iceberg. And as the other rents continue to drop, that's not only going to affect your NOI, which is going to affect the cap rate, which is not going to be redeemed by the fact that interest rates drop to some degree, whatever they do, but it's also supply and demand. So everybody's been waiting, and to the bottleneck that I referenced earlier, when those all hit the market or they reset the market, that seller is going to be in a really hard position. And it depends. Like, everything is individualistic and like deserves very specific thought process on how to deal with it, depending on the price you bought, depending on how active an investor you are. So if you're a very passive investor and you have no debt and you have no intentions other than to hold on to the building to give it to your children, you're going to be fine. The Denver market's going to bounce back, right? But if you're going out and considering a refi, or you're having some pressure because of insurance or something that is causing an event, then I don't know if waiting is the right thing, because so many people are doing that. And then the waiting isn't only going to affect the NOI. So even if the interest rates go down, which in theory is going to cause the prices to go up, it's not so simple, because the NOI is less. So now your cap rate is less, even though there's more buyers due to the interest rate. And the supply and demand, now there's more on the market right now. So it's going to cause a, supply and demand, more buyers out there, and it's going to completely reset the market. And so it doesn't mean that Colorado is a bad market or be in total fear. It just means, like, now is a moment, in my opinion, now is a moment for action. Take action, reposition.
Well, let's talk about that, because set aside, people with properties looking to sell in 1031. Let's just talk about people looking out there to go to acquire, right? We all, as investors, we want to go out there and buy. We want to buy a good deal. We want to buy a distressed asset. And for, I've seen my own, modest real estate portfolio, directly owned stuff, and just LP investments, other syndications, and looking at other deals. A lot of it is kind of like death by 1,000 paper cuts. Okay, rents dropped $50 a unit, insurance is up, taxes are up, expenses are up, vacancy is up. Vacancy's up, evictions are up. Like, it's all this, like, hey, but you got 10 line items that all the expenses are going up, and it's driving your NOI down. And I know some of these current people out there, they're getting, they no longer cover their debt coverage, or their floating rate debt, 3%, 4% from years ago is no longer fixed. Now it's floating debt. Like, where's the opportunity out there for people who just want to, like, not sell and trade or reposition a curtain, but go out there and buy? Because, like, I've talked to a lot of people, money's on the sideline, investor appetite is there. And I mean, the market, stinks right now. And this is the time you should go out there and buy, because I think we're at the bottom-ish of the market.
We'll see.
I mean, that's been my theory for a little bit right now.
That's what I've been saying for, everyone's been, we'll see.
Eventually we'll be right, though. But, like, I think, like, I mean, things might get a little bit worse, but I think we've seen, like, the biggest kind of, like, correction, and a lot of, like, the, things are stabilizing now as well in terms of expenses, and where the rent floors, things like that. But, like, where's the opportunity to go out there and start buying some of these distressed assets, either from the landlords or just tired and be done with it? And, like, when do banks start, they stop the extended pretend and they start, like, actually forcing some properties to sell, because, like, hey, all right, we've been floating for a year and a half.
Yep.
You're not getting better. Yeah, well, like, where are those opportunities?
These are the conversations that are all, like, coming to right now. But to go to the original
question.
That was
a long question.
No, it's a long question, but, like, the original question was, what if you're not exchanging or selling and you're just buying? But I want to take a quick second to go back to somebody that would exchange, and I didn't do a good job of answering it, started rambling there for a second. But my thought with somebody that would exchange, it depends how active you are. You know, if you're a passive person, like maybe you can hold on and wait. If you're an active investor and you pride yourself in someone that is talking to brokers every day, you know, tracking the market, talking very actively managing your property, then I think now is the worst time to be passive. Like you need to be active, right? And that's not for everybody.
What do you mean by that? What time to be passive?
Passive meaning I'm going to wait 6 months and then it'll be better. I'm going to wait till next fall, then it'll be better. It's playing prevent defense, you know? If you pride yourself as being an active investor and that is your job on a day-to-day, that seems silly. Like with so much opportunity right now, it's like be active, make a move to get into a position to improve your situation. But anyway, going back to the question that you just asked, which was about if you're not selling a property and trying to, you know, trade, you know, a sick cat for a sick dog, or like move in the same market from a worse location to a better location or a newer product or whatever the situation may be, and you're just somebody who's ready to buy right now, again, same thing. Like to me, maybe it's just a personal philosophy, but being passive rarely works. Being active works. So sitting there and waiting to time the market and figure out where it's going to be perfect to acquire, to me, kind of seems silly. Like there's opportunity right now. And while I would be, you know, it's kind of different. So to use a sports analogy, when I was talking about not playing prevent defense, for those people out there that understand the sports analogy, I'm not saying, you know, throw the Hail Mary, throw the deep ball, every single pass, go crazy, be active. I think that on offense, when you're going to acquire a property, it is time to run the ball. It's like, which property is in a good location? Which property has good bones that's going to work? Which location is going to bounce back the fastest as the Colorado market bounces back? It is not a super complicated situation. It is fundamentals, run the ball. So kind of, it sounds like I'm talking out of both sides of my mouth, but I don't think it is. Like if you're on the sell side, do not play prevent defense and say, I'm in a tough situation, but if I wait 6 months, it's going to be better. But if you're on the offense and you want to buy a property, I'm not at all saying like overextend yourself, take huge risks or anything like that at all. I'm saying fundamentals, good location, good bones. And we can talk about like the specific submarkets and stuff if you're open to it, because it's kind of tricky. It's not so simple, but like if you're in the buy side, then it's like, it is simple as far as like income, cash flow, good location, newer construction if possible, and then every variable kind of plays on itself. If you're in a better location, then you can kind of have older construction.
So what are some recent deals you have seen that you said that you know your investors have liked and either, you know, help put a deal together, you saw and you're like, wow,
yeah,
this is talking about, hey, this is a great location, great vintage, great submarket, great opportunity here. Like, what are some recent deals that have come across your desk that you're like, hey, is it like, give us that, like that pulse check?
I think the first one that came to my mind right away is a very specific situation, but I feel like that could be just talking constant stories of where properties values have shifted from where I originally connected with that owner. But the one that comes to mind immediately, the one that like really kind of was like an epiphany to me, is I was at an inspection with a good client of mine. He's buying a 10 unit in a really good location. And
is this Denver?
Yeah.
Okay.
It's in Denver. Really good location. And as he's buying that, as we're doing the inspection, right afterwards, I'm going to meet with another really good client of mine who has offloaded most of his properties, but still has a couple 4 units, and wanted to meet up with me to just kind of see the property, the value. And so anyway, I'm leaving this 10 unit. The 10 unit, we're under contract at about 1.3 million, meaning about 130
so 130 a door?
A little over 130 a door.
And this are these like, are they 2-1s? What's the unit size?
There's 8 1-beds and 2 2-beds.
Okay.
So mainly 1-beds.
And then this is a great submarket of Denver for
the best by Cheeseman, The best. Yeah. It's
So
great.
low 100s per door there. Okay, so
Yeah.
that seems insanely low to me.
Yeah. And, his pro forma rents, even if he doesn't do work to it, but like, once he fixes up the units and stuff, are going to be over 1,600, 17, it depends on how well he renovates the building, but very simple logic. Right next door is getting those rents already. It's not a complicated situation.
So pretty standard value add play.
Yeah. Yeah, exactly. And then I'm going to meet with this is where my like epiphany happened. And so, because everyone talks about how the market's slower right now, and maybe it just hit me differently at that moment. I don't know, but that's where like the epiphany happened to me, because I'm going to meet with somebody who owns a 4-unit out in a submarket out on the west side. And I had valued their property a couple years ago, 3 years ago, at 1.3 million. So essentially the same price, a little bit like essentially the same price. And I was already feeling like the butterflies in my stomach of telling him that I do not think that's where the price is. I think it's going to be sub 1 million. It's going to be in the 900s. And, personal relationships aside, that's where like the more macro, what's happening in the Denver market just kind of hit me. And I was like, this is a moment for opportunity. It's like, who is going to take advantage of the fact that you can buy a 10-unit in a great location for the same price that you could have bought a 4-unit in a, not a bad location, but not a location 3 years ago. And so then, you asked for a specific example. That's the one that was the epiphany for me. Then I started thinking about a little more.
One more in there. So for this 10-unit back in the the good days, 21, 22, I mean, what's that 10-unit trading?
280 a door.
Okay, so I mean, we're talking,
there's
over twice the price.
Yeah, I mean, there's one a block away, ish, listed at 280 a door, and it's listed at a price that isn't going to sell, to be honest. But like, they're following the trend that it was at, so I understand why that particular broker that isn't as in touch with the market listed it at that price. But yeah, that's 280 a door, and it will be again.
So you're saying like, so this property in that market was trading about 280 a door 4 years ago.
Yeah.
And now they're about 130 a door. So that's over a 50% decrease in value right there.
And that's a little better than most deals, but like the average percentage, I just put this together with a colleague of mine. The average percentage is 40%.
Of what you're seeing from 3 or 4 years ago to now. So
40% drop.
So 40% decline in value. And is this mostly in like the 5 units and above and like the commercial stuff?
Yeah. Yeah. I mean, it's similar still with duplexes and 4 units, because the people that buy a duplex or a 4-unit are usually someone who's like a doctor or someone that's, it's like a side project. So they're more following their emotions. So definitely the same trend is happening there, but on the commercial legitimate investor side. Yeah.
Now, my guess here is, I mean, I don't think I mentioned at the beginning, but you listened to my fourplex earlier this year. Similar situation. We talked about a certain client where, hey, we went in with aggressive price.
Yeah.
Pretty much crickets on there. But I'm in a very safe position. I cash flow.
Yeah.
I have 3.5% fixed debt on there.
Yeah.
Like I'm an opportunistic seller on there. But like my jaw is dropping when you say a 40 to 50% discount on properties like this 10-unit.
Yeah. And I mean, that's why I'm excited. Like, I'm excited because even, it's tricky because let's use you as the example. Like, you're not hitting the number that you were targeting, but it's still a win if you can trade out of that and be an active investor and go get into a 10-unit like this or whatever the situation might be. Right. And so to me, that's exciting. But at the same time, like you just said, you don't have an event coming up that is going to push you to sell. And so my whole thought process while talking to people is, there's the people that are waiting and need to be patient and have no event taking place. There's the people that have an event taking place. I worry for those people. And then there's the people that are saying that they're active investors, but are not making an active move. They're making a passive move.
So I mean, I could definitely make. I'm a argument side of the case here. So hey, I want to get the aggressive price I had a couple years like all sellers do. But hey, I lower it. I sell it for $950 instead of 1 and change. But then even though I'm not selling that for top dollar, I'm selling it for 10-20% below what I could. I'm now going to take that money 1031 over into more of a commercial asset where I'm getting a 40 or 50% discount on, and there's greater value creation in buying that property to go up. Which I would do if I was still very active on a hands-on. Like I'm talking numbers like, wow, maybe I should do that now.
You should.
But I don't want to deal with the 10 years. That's where I come back to.
Should.
But I think there's great opportunities for people to do that, because I mean, like, if you can buy a 10 unit for that price, right, that's just nuts to me.
Yeah, you should. I think you should. But like, but
you're getting me interested again. So keep talking.
Yeah, but I get that it's like not so simple, and it depends on the person's situation. But to me, it's like when the market bounces back, because again, like to go back to what I was saying earlier, the Denver market, the Colorado market, the Front Range market here, this is not a bad market. There's a lot of negativity right now about tenant laws and, you know, the population decline, things like that. And I think that is very the macro and not focusing on the micro. And I think that the markets that are going to bounce back the quickest, because Denver is a strong market. It's not LA yet. It's not San Francisco yet. So it's still a good place to be, but it's also still growing towards one of those, is the locations that are going to bounce back the fastest. And so, you know, that's a whole nother topic, whether it's central Denver or other quicker rebounding markets. Like, it's more about the micro trend and saying, I want to exit this micro market to go into this one, right?
So from a high level, are you, if I'm hearing correctly, is that selling, hey, you know, Class B and C assets and markets, and get into more desirable submarkets, newer vintage? Or is that one of the plays?
It's one of them, yeah. Like,
okay. Can you walk us through another, like, just deal you've seen? Because, like, another just deal you've seen that you were, you know, part of, or you just, you know, saw in your day-to-day of wheeling and dealing?
Yeah, without giving like specific addresses or anything. I mean, one of my better clients, really smart investor, kind of has the same thesis as I do. And his objective is to move from some of the submarkets that are experiencing a little more vacancy and move towards the more core markets that people have naturally been driven to. And so and it kind of ties in with what you were saying before. So there's a lot of people that are going to sell a property and exchange into another property, and they feel like they're taking a loss. Like, emotionally, it's a lot of emotions. They feel like they're taking a loss, but they're still making money off of what they originally bought it for.
Yeah.
A lot of my clients are actually losing money. Like, it's the ones that have a bank note due or some situation, they're actually losing money. But the ones that feel like it's a loss, but it's better to move from the objective, the targeted price, to a more reasonable price that's going to transact now and move into a different market, whether it's location or newer construction. Like, to me, that makes sense. To me, those are the clients that I connect with the most, that are like the most active, trying to take advantage of it and put me to work, you know? Does that make sense? Like,
that makes sense.
Yeah. Like, it's not that it's just be active or be passive, but it's, if you're in a situation that you can make a move, now's the time. It's the Warren Buffett quote, like, when people are fearful, be greedy. When people are greedy, be fearful, you know?
So what's another, like, just great deal you've seen recently? Just pure on the buy side.
You know, I hesitate to draw too much attention to specific owners or properties, but, you know, really strong locations, whether it's central Denver or Arvada. I hesitate to like draw too much attention to a specific property, I guess, but
or just keep it high level, like just general, like, kind of like price and terms and cap rates you're seeing.
Yeah, I mean, I can just tell you that in maybe not A, but like B plus, A minus locations, there's institutional investors that had properties that they purchased for, you know, call it high 20s, near $30 million, that are looking at offers in the low 20s, and their occupancy is at like 80%. So there are deals to be had right now. There's deals that people purchased, you know, and I'm talking over $50 million deals that people purchased for $250 a door, that are now entertaining offers at 140 a door. And it's ironic because the people that are entertaining those offers at 140 a door, and I originally said I'm going to kick the can 6 months. I'm going to wait another 6 months. And I get that logic, and they have investors they have to be held accountable to. But I guess like my message right now, if I was talking to someone, would be more to the private investor that just owns it alone. It's like, be cautious about waiting 6 months and saying, I'm going to be in a better position in 6 months and the market's going to change and the interest rates are going to change. It's like, it might be time to make a move right now. And I'm not saying to just make a move, cut your losses. Like, it might be time to make a move and just reposition into something else, but it is time to be active, you know?
Well, let me run this, hypothetical. So, the fourplex I was trying to sell in Westminster.
Yeah.
Let's say we sold it in the 900s, which is probably where could have sold it for, I would have had $400,000, $500,000, say $400,000, be conservative. I would have $400,000 in exchange for down payment.
Yeah.
Where would you guide me from a fourplex in Westminster, what C plus, B minus kind of neighborhood asset, say $500,000 for easy math to round up for like, a better property, better location, and just a more distressed one, like $500,000 to play with. Where would you say, hey, Chris, go look over here?
Yeah, my lame answer is there's so many opportunities. It could work anywhere. My more specific one is be the example that I gave you before. That's that 10 unit in central Denver that would be a perfect property that I would much rather own that than, no offense, but then the 4 unit that you have, right? Like that to me makes sense. But I really think, and this sounds very self-serving, but I really think it is a moment to lean on more micro knowledge, and whether it's the advisor, the broker you work with, the property manager, talking to your neighbors, doing a little bit of the work on your own, calling the properties next door, asking them what they're renting their property for, because I don't think it's so clear as like, this is the hot market, this is the cold market.
Yeah.
Like there's opportunity in a lot of places, but obviously the opportunity is going to come faster in the more centrally located spots.
Okay.
That are near Denver, Cherry Creek, things like that, right?
Yeah.
The places, one other thing, like especially like Denver is kind of coming, the supply, the new construction has kind of come to a halt. So the absorption rate is towards the advantage for people that are investing in Denver, where it might be bit of a disadvantage in a place like Colorado Springs where there's been a lot of new construction that hasn't fully been absorbed.
I think last year was like peak delivery for Denver, right? Like Denver Metro of new units.
Yeah.
Yeah. And we're still a lot of high delivery, but we're seeing that taper off a lot this year and really get close to zero next year, right?
Exactly. And that's part of the reason that there's so much opportunity right now and things are like the prices are lower right now, but that's going to switch because there isn't new construction right now.
So let's talk about, you mentioned this a few times now, let's talk about micro trends, kind of like submarkets, street by street, because, this is where, talking with brokers like you, it's hard to get this type of data. Like, hey, I read the Denver Business Journal, you get your CoStar data, you don't get the granular street by street micro trends.
Yep.
Talk about the micro trends you look at, and then how that compares to some of the macro trends and just how sometimes they differ, or how investors can use all the data to go out there and find the best property for themselves.
Yeah. I mean, it requires more work and more effort. It's not Googling an article to me, my opinion, completely pointless to Google an article or read about what's taking place in Denver in general, or the fact that they're trying to revitalize this specific submarket. It requires work and effort.
Also, talk to brokers like you,
literally,
property managers, right? Like that's
yes.
We're such an inefficient market, or real estate's an inefficient market.
Do your research.
ChatGPT does not have that data for me yet.
Yeah, and it goes. Yeah, exactly.
Right.
I mean, it might give you an answer, but
if it's real or not, it's different.
But yeah, go. It requires effort. It requires a little trust if you're going to go to your resources, whether it's a broker, a property manager, or just calling the person that owns a building 1 block down, and asking them, what are you renting this for right now? What concession would you offer me? It requires effort. And that goes back to the question you asked earlier, like who is a person that should be active in this market and who's a person that should be passive in this market. Like if you're a person that doesn't want to be active, doesn't want to go to these resources and do it, like maybe it is a time to be passive, to be fair. Because my whole thing is like, do not be passive right now. But if you're the type of person that doesn't want to put that effort in, maybe be passive. But it does require effort. It's not so simple. I can't give you an answer where I'm like, this neighborhood is awesome, this neighborhood sucks. I have some opinions about which ones might be a little more challenging, like Aurora, but a couple others. But, you know, it's not so simple and clear as like, this neighborhood's great, this one's bad. It's very what's happening one block away. It requires effort. And if you're an active investor, you're going to do that effort, and then you're going to figure out if it makes sense to trade out of that into a better opportunity.
So, I mean, kind of like to boil that down, the the opportunities are out there, but really for people that are active in terms of time, effort, and not, hey, 1 or 2 hours a week, but we're talking, I mean, a few hours plus a week and actively researching, actively driving, actively working with brokers, like just focused and intentional, right? That's where like the opportunities align for a lot of investors out there right now.
Yeah. And I would hope that there's very few investors that are so passive that they aren't willing to put those few hours in of calling their neighboring building, their competitor, and doing a rent survey and seeing what they're currently renting at, or calling the broker that you trust to work with and saying, what are you hearing out there right now? Like but you have to be a little active. You have to take a little bit of proactive instead of reactive. You have to take some proactive action and see what's happening, but it's not a lot. Just see what's happening because, and I mentioned this earlier, because if your rents have dropped, think of like a very simple property, whether to make it clean, like a 10 unit. If you have 2 units that have dropped by $100, that doesn't affect you that much with your NOI and how much. So it's very like quick and easy answer to say, I'm just going to wait, and I'm going to wait 6 months or wait till the fall or whatever the case may be. But when you go and call the person that owns a couple blocks away, it turns out they have high vacancy. So they're offering, and maybe it's a Class A institutional seller, I don't know. But you call that person, they have high vacancy, they're offering concessions, they're dropping their rents several $100s less than yours. That is an issue. So if you were to go buy a building and say that you could raise your rents $100 immediately on day one, you'd be excited. But for some reason, people's minds don't get triggered in the fact that their rents have dropped $100. That's a problem. That's affecting your NOI. It's happening at the building down the street. And so it's affecting the price that building's going to sell at. When the market resets, it's going to cost you hundreds of thousands, if not more, depending on the unit size, for a $50 rent decrease, for a $100 rent decrease. And to me, again, like this just was an epiphany I kind of had recently, because you just kind of like the boiling frog, don't realize it right away. But initially, everybody's just saying rents are down, vacancy's up, don't do anything about it. But if you would be excited about the fact that you could buy a building and raise $100 on day one, you should be equally concerned if your rents are dropping $100.
Yeah,
that is a moment to pay attention. Yeah, it seems like nothing. No, that's a moment to pay attention. Yeah.
So a couple questions here before we wrap up, Kevin. When are we going to start seeing bank distressed properties?
It's already happening. And it's ironic because it's already happening, and it's ironic for the people that say they're going to wait and see when they're going to wait for that moment to take place. It's already happening. They're not going to be listed on the MLS and it's already happening. And
Did it start like earlier this year? Or...
Yeah.
Because everything I've seen kind of like beginning of this year, it's like, wow, banks started forcing some properties to the market. Yeah.
It's already happening. And the banks don't want to deal with it in the same way that a seller would. A seller is going to say, I'm going to go list this property at this price. And if I get this price, that's fine. And it's a very common sense strategy. And so a lot of investors aren't thinking about this very basic thing that like the banks aren't going to do that. They don't want to deal with it. They don't want to manage these properties. So they're already in conversations with companies like ours. We're talking to lenders as much as we're talking to genuinely. We're talking to lenders as much as we're talking
lenders
to
have the deals right now, right?
Yeah, literally. Yeah. And they're not going to be openly marketed. Like that is happening right now. Literally.
Okay.
Yeah.
And so you started to kind of see it happen like here in 2025 is when you started seeing that come online?
Yeah.
Okay.
It's
And do you think it'll be a trickle for a little bit, or is there going to be like a dam breaking here, or is that just who the heck knows type of crystal ball?
Yeah, that's a question for not someone like me that's just calling someone and asking them what their rents are and what they'd sell for. That's where I think that my advantage is that I'm talking to owners every day. I have no idea. But just to have fun, like I would guess, my guess is that it's going to be a trickle effect for quite a while.
Okay.
And it's not going to be, I'm sure there's going to be news articles and stuff as things change, but like, I don't think all of a sudden everybody's going to be like, today's the day to buy. Let's go write offers. Like, I don't think that's going to happen. I think it's happening right now. Right now is the time. Genuinely.
All right. Kevin, this has been great. I'm glad we finally got you on the podcast. How can people connect with you if they want to like explore some deals, talk to you about submarkets? Like, what's the best way for people to get a hold of you?
Well, the easiest way for me, I'm not a huge social media person, to reach out to me directly. Phone number 303-990-4361. Text, call. I don't know how it works. I can give you my email address and stuff.
I'll put it all in the show notes. So basically, call or email. Don't DM me on social media.
No,
right? Yeah. And which is great because I know people out there, like there are people out there looking for deals.
Yeah.
And for people who are active, I think this is an amazing opportunity right now to go out there and start looking for deals because they're starting to come online. And I think for a while there's going to be a lot of great deal flow coming online. So Kevin, I appreciate this. We'll put your contact details in the show notes. I'll have it back on in the future again to talk more about what's going on in the market.
Yeah.
So thank you, man.
Awesome. Thank you, Chris.
All right, everyone. Thanks a lot for tuning in, and we will see you next week.